Good morning. This is Horizon's Middle East and Africa. Our top stories this morning. Strait standoff. The US and Iran remain locked in a struggle for control of Hormuz, with Washington now saying that the ceasefire will stay in place until Tehran submits a new peace proposal. Stocks and bonds falling as the stalled US-Iran talks and the Strait's continued closure push oil prices higher. And Tesla under pressure. The company flagging billions of dollars in additional spending this year to support Elon Musk's ambitions of transforming the EV pioneer into an AI and robotics giant. Well, it's just gone 8 a.m. across the Emirates. I'm Johannesburg in Dubai. Let me tell you what you're in for this show. A mix of both earnings on the micro side and geopolitics. I'm going to start with the earnings because we're getting some numbers out of the region. Let me just bring you the figures that we have just got from Emirates NBD. So their earnings have come through. First quarter operating income, 14.4 billion dirhams versus the estimates of 13.16 billion dirhams. And in terms of the pre-tax profit, it is 8.2 billion dirhams versus estimates of 8.17. So top line figure, we are seeing quite a significant beat. Bottom line, we are seeing in line with expectations. In terms of impairments, 800 million dirhams versus minus 500 million dirhams year-on-year expectations, so slightly higher than what the streets had been anticipating. But bottom line is, when it comes to the top line figure, that key operating figure, it has actually come in higher than expectations. And then also just now we are getting more headlines crossing from FAB too. This is First Abu Dhabi Bank as well. And just to give you the first quarter operating income is 9.34 billion dirhams versus estimates of 8.94 billion dirhams. So a beat also for FAB. First quarter profit coming in at 5 billion dirhams, just above, versus estimates of 4.28 billion dirhams. So also another beat. So at the top of the show, we've had two banks from the region come in, Emirates NBD, FAB, both beats versus expectations. Clearly, of course, very topical as we speak about the situation. And from what we can tell here, the banks so far are posting pretty robust results from the two that have just come through in the last few minutes. So that is from the region. We have more, though. I want to bring you some European car registration numbers because there the figures are quite interesting as well. And what we're seeing is actually, contrary to expectations, European car sales have risen 11% to 1.58 million. And these are actually the strongest figures in 2 years, and showing that growth for fully electric and hybrid models really are powering some of the recovery here. Of note that sales expanded in all major markets. EV deliveries are up 42%. And then BYD, which has more than doubled its European sales in March, has sold almost 38,000 vehicles. And then finally, I just want to tell you Tesla, because remember last year, one of the big stories was Tesla struggling. It was a losing ground versus BYD. It's making a bit of a comeback, and this I thought was quite interesting from Tesla registrations. They operate a factory in Germany, obviously, and their registrations jumped 84%. So a recovery coming through for Tesla. Its sales this year up until last month are up 45%. Okay, with that, let's broaden it out and talk about global markets and how things are faring, because the handover from Asia today, not so pretty. We'll get into that in just a moment. Down 1.1%. S&P futures also leaning towards negative, down 0.6%, though we did have a record close for the S&P and NASDAQ yesterday, really powered by, once again, the earnings season, stronger earnings coming through, like Boeing, for example, one of the names that we were watching out for yesterday. Tesla, we'll talk about what's happening beneath the surface there. And then, of course, the fact that there is a ceasefire in this part of the world, though I guess there's a question about how long it's going to be sustained for. And then all of the developments around the Strait, which is keeping the price of Brent above $100 now. So up 1.3%. $103 is where we are for Brent. 10-year yield sitting at 4.32. We are up 2 basis points today. It is the fourth day in a row that we see yields come under pressure. And then switching over, something else I wanted to flag your attention to, not related to the war, and just quite simply the fact that we continue to see record inflows into the semiconductor index in the U.S. And actually, our colleague Dan Curtis yesterday put out a note saying that about half, 45% of S&P 500's earnings growth this year has come from semis and equipment makers, and just really tells you that a lot of the rally that we're witnessing in the S&P right now and in the NASDAQ has come from the semiconductor space and chips, and that has really picked up momentum in the last couple of weeks, putting aside all the geopolitical developments. Okay, with that, let's pick up the conversation. Min Min Lo is in Hong Kong for us. Min Min, not a pretty handover today.
Yes, Jomana, you were showing the tech chart, and tech has been in focus this morning, but the sentiment sort of turned sour as the day progresses. Right out of the gate earlier this morning, we had Taiwan, Korea, and Japan actually at a record high at one point earlier this morning, but clearly we've given up all those gains. Every single market here on the board are in the red now, led by the Nikkei and Hang Seng as well. And we did, woke up this morning just digesting some of the strong earnings out of the U.S., right, from Boeing, from Texas Instruments and the like. And then we had SK Hynix reporting earnings, very, very strong, just knocking it out of the park there, fivefold increase in its net profit. And then we have the South Korea GDP numbers as well, also topping all estimates. So initially things were looking good, but then as the day progresses, it seems like some of the negative headlines out of the Gulf region that perhaps started to overshadow. We start to see a fading of the tech theme. Some of the domestic consumption names started to drag these indexes down. And again, it seems like investors are very sensitive to just any noise, any market chatter and speculation as to whether things are going to escalate in the Middle East again and again. We are, seeing US and Iran very far apart. The key question is when the Strait of Hormuz is going to reopen.
Min Min, thank you so much. Big question it is, of course. Min Min Lo in Hong Kong. Let's talk about this part of the world. The U.S. and Iran remain locked in a standoff over the Strait of Hormuz, with both sides effectively choking off traffic during an extended ceasefire. Iranian gunboats have fired on commercial ships in the key waterway, with a cargo ship and a container vessel coming under fire. The U.S. has also intercepted 2 of Iran's oil tankers and has a 3rd vessel under escort in the Indian Ocean. Washington now says it's awaiting a fresh peace proposal from Iran.
And the president wants a unified response. We are completely strangling their economy through this blockade. They're losing $500 million a day. The Kharg Island is completely full. They can't move oil in and out. They can't even pay their own people as a result of this economic leverage that President Trump has inflicted over them. So he's satisfied with that as we await their response. And we will see. The president has not set a firm deadline to receive an Iranian proposal.
Joining us now is Laura Davison, Bloomberg politics editor, and Waylon Soon, our oil and shipping reporter. Waylon, let me start with you. It is being described as a straight standoff. Walk us through all of the developments over the last 24 hours on both sides.
Right. So yesterday we saw Iran shooting at ships, as you mentioned. These ships were a container and a cargo vessel. Going down south, actually, they were about to exit the strait when they were fired upon. And thereafter, we have reports of Iran seizing those ships that are shot at, boarding them, and then taking some of them, at least one of them that we can see on the ship tracking platform. So this really marks like the first seizure by Iran on ships going through Hormuz. And it's the second round of firing that we've seen in less than a week. This comes after the U.S. said that it has turned around dozens of ships that tried to go past the blockade. Some have actually crossed the boundary line, but that does not mean they're in the clear because, as we have seen, the U.S. Navy has managed to seize some of those Iran-linked tankers.
Okay, so still a lot of questions about the safety of ships transiting through the Strait of Hormuz. Laura, let me just come back to you because the Iranian side once again reiterating that as long as the U.S. naval blockade stays in place, then they're not going to move on to the second round of discussions. How is this setting us up for a potential other round of diplomacy? What needs to be done here to break the deadlock?
This is really setting up a battle of wills between Trump and the Iranians on who can hold out longer. Trump, has gone into this conflict thinking that, he could sort of dismantle the Iranian military. That has proved to not be true. And the Iranians have been particularly effective in using tools like drones and some of these smaller ships in the Strait of Hormuz to be able to police that territory, even if some of their larger, more common military assets have been destroyed. So this is, put sort of an interesting moment for Trump. We've really seen him shift strategy here. We've seen him over the past 2 months, time and time again, set some sort of deadline for Iran to come to the table, for a deal to be struck, and then have him back away from that deadline at the very last minute. We saw that, of course, earlier this week. Now we're having the White House declining to put any sort of timetable on when Iran needs to come to the table. This is also coupled with sort of a ratcheting up of tensions in the Strait of Hormuz, with both the Iranian side and the U.S. side testing what their naval blockades, what their policing capabilities in the waterway in and around the waterway are able to do. That really kind of raises a lot of questions for the ceasefire that has sort of been extended indefinitely. Can that hold, particularly as we're seeing the U.S. and Iran, fire on ships, the U.S. interdicting some of these Iranian flagships coming through. So it's a very fragile moment, and unclear, how this could lead to talks happening without some significant concessions from one or both sides.
Yeah, and Waylon, let me just ask you about the visibility of shipping over the next couple of months. I mean, even if there is a resolution the next few days, Washington Post yesterday putting out an article citing Pentagon officials who briefed Congress that it could take up to 6 months to fully demine the Strait of Hormuz and to make it completely clear of some of these explosive devices. What does that mean for the outlook?
I think the timeline for demining the Strait is really depends on who you are asking, but it definitely introduces a certain element of uncertainty in when the Strait can fully reopen. I mean, during the Singapore Maritime Week that's happening in Singapore this week, I spoke to the IMO Secretary General, Arsenio Dominguez, and he actually said that even if there is no confirmed reports of mines being laid in the Strait, they do have to have that as part of the evacuation plan to reopen Strait of Hormuz. So this would definitely extend that reopening period. And again, the longer the Strait cannot return to normal, the harder it is for global energy markets to resume to normalcy, because we see production getting shut down, and that's going to hurt future energy prices too.
And Laura, while sticking with the theme of maritime U.S. Navy, of note overnight is that the U.S. Navy Secretary John Phelan lost his job overnight. What do we know about what went down there?
Yeah, so this is a major Trump donor and an ally who was in that job as the top civilian official in charge of the Navy. He, after discussions between Trump and Pete Hegseth, was ousted from his job. There were, several disagreements and infighting between top Pentagon officials, one of them being sort of disagreements over U.S. shipbuilding, sort of longer-term strategic priorities. But it's really notable that this firing comes, really as activity in the Strait of Hormuz is really heating up, the Navy playing a key role there. There is a military official, someone in uniform who's in charge of the day-to-day operations there with the Navy in the Strait. But it raises a lot of question about, kind of the cohesion within the Pentagon and, what the strategy is going forward, as we're seeing, a lot of these disagreements, both dealing with the war in Iran, but also broadly within the administration. We've seen a lot of turmoil, top officials leaving, the DHS secretary, labor secretary, attorney general, all also being fired just in recent weeks.
Laura, thank you so much. Laura Davison, Bloomberg's Washington Deputy Bureau Chief, and Waylon Soon, our oil and shipping reporter. Let's continue the conversation now with Julia Roknifard, Senior Lecturer at the School of Law and Governance at Taylor's University in Malaysia. Julia, good to have you with us. We've been describing all of the developments around the Strait the last 24 hours or so, and there have been some notable developments. But let me just ask you whether you believe now that we are in a ceasefire, or is it one step further than that, in that it is still a state of conflict, but actually just a frozen conflict for the time being?
It is still a state of conflict. There has been some pause in it. The status of further negotiations is unclear. And there's been a lot of speculations backed by the facts on the ground that on the part of Trump, as he's concerned in the decision making on this operation, it's just the time that has been taken in order to regroup, think a little bit, but probably it hasn't been just enough time, this 2 weeks that we have seen. So the ceasefire has been extended, and that was the American initiative in the first place. Iran, just as we've heard recently, played along. At first, Iran just said that there is no point in continuing these negotiations because even this fragile ceasefire, it was breached. The US blamed Iran for that. Iran blamed the US. The blockade imposed by the US on Iran, something that Iran would not expect if the US were sincere about the negotiations. So it more and more looks just like a pause in order to regroup and renew the hostilities. And I don't think it's going to work, the recent statements that is going to go on indefinitely until Iran breaks.
What do you think is more likely? Another round of discussions or another round of hostilities?
I think another round of hostilities is more likely. It looks like Trump has been looking for a casus belli in order to prove it also to the allies that he's got a just cause in order to continue with that, because see, Iran is not agreeing to negotiate. Iran is also already, and I think the stance in Tehran is that the hostilities are going to resume sooner than later, and it has been proven by the blockade, which is not, by the way, airtight, but still is in place, provided by the United States. What I wanted to say, the point I wanted to make here is that this not at all airtight blockade that's been imposed on Iran is not going to yield any significant results. They are now saying it will take just 2 weeks for Iran's economy to break. I don't think this is happening, and one of the reasons here is that probably Trump needs to pay that visit to President Xi in China in the first place that he has been postponing, because with Chinese support, probably not military, but diplomatic and financial, Iran will be able to get over this blockade.
Okay, I just want to go back to what you said about the bigger likelihood of a return to hostilities. What can the U.S. and Israel achieve in another round of hostilities that was not already achieved in the first 7 weeks of this war, 6 weeks before the ceasefire?
Well, it has become clear that so-called regime change is not taking place. People are not pouring into the streets to overthrow whatever remains of the Islamic Republic the way we used to know it. So now I think the calculation is that the Iran's economy is going to break, and either Iran is going to ask for help, or maybe disgruntled people are still going to make the desperate move, pouring into the streets and demanding something from the regime, demanding for these negotiations. I think that first option that I named is the more likely one, that Iran will yield to the need to negotiate. But it doesn't seem like a plan that is going to work, especially because apart from the Iran's economy, the whole global economy is suffering, and that cannot go indefinitely, because that's a blockade not only against the Strait of Hormuz and Iran, but that's de facto a blockade against the whole world.
I want to go back to what you said about China and what role you think China will play in somehow bringing a resolution to this conflict. And actually, the question is, do they want to see a resolution to the conflict right now? Because they are, in relative terms, a winner from the disruption that's going on.
Not as much of a winner. I think in China, the perception is that it is indeed a part of a larger plan by the United States to counter China, just not starting from the Straits of Malacca, although we already start hearing some news in the Straits of Malacca on the U.S. effort to counter China right here. It has started in the Strait of Hormuz. So I'm sure that China does not like seeing that picture at all, and it puts every effort to help Iran. It has put a lot of effort so far diplomatically Pakistan for sure has this diplomatic backing along with Saudi Arabia to be the mediator in this situation. China is likely to be supplying Iran with not the military technology per se, but reconnaissance, the intelligence, that's for sure, along with Russia probably. And in terms of financial support, China has been and will be supporting Iran for that economy not to collapse, because it, again, sees it as a part of a larger plan to counter China itself.
Julia, a pleasure to chat to you. Thank you so much. Julia Roknifard, Senior Lecturer at the School of Law and Governance at Taylor's University, Malaysia. Well, U.S. active futures are falling in a volatile session, while Brent oil trades above $100 a barrel as the Iran war keeps markets jittery. Tech also in focus today as robust earnings drive the AI supercycle. Joining us is Eric Robertsen, Global Head of Research and Chief Strategist at Standard Chartered Bank. Eric, good to talk to you. If you look at the market today, equities are telling you a completely different thing from oil markets and energy markets. Energy markets are pricing in what you could describe as a protracted state of conflict. Equities have moved past the conflict and are focused on other things, earnings, micro, AI, once again. How long can this bifurcation in markets exist for, do you think?
Good morning, Jumana. I think it's a good question. You're absolutely right. In our opinion, there's a significant divergence or even contradiction between commodity markets and more traditional equities. In our view, the commodity market is probably the more relevant indicator of what the long-term outlook is, which is, even if we do get continued negotiations, certain aspects of a ceasefire, there is going to be long-term economic scarring, certainly for the commodity importers of the world, Asia in particular. I think equity markets are taking more of a binary approach, right? They're not seeing the subtleties and the long-term impacts of this. They want to look through the crisis. They want to look to an end destination of conflict resolution, and they want to return to a sort of a more normal economic outlook. I don't think it's so easy. I think the path to that end destination is going to remain volatile, as we've heard from a few of your previous guests. And I think the challenge for the global economy is that even if we have a continued coexistence of both a ceasefire but periodic flare-ups, that makes it very difficult to discount or handicap what the long-term impact on the economy is going to be. So I think it's a real challenge.
Yeah, one thing I picked up in your research report is you have become structurally bullish commodities. You've called it a, quote, new bull market. Where exactly do you see that showing up?
Look, it's very natural that markets would want to focus on oil and gas, but the way we've been approaching this particular crisis is to think about the sort of secondary and tertiary implications, whether it is petrochemicals, plastics, fertilizer, etc. I think what this crisis has done is shown a light on where and how large parts of the global economy are structurally short or structurally vulnerable to their commodity supply chains. And what we've discovered, unfortunately, is that there are, of course, a handful of large economies that maintain strategic reserves of various commodities. Many economies do not. If we think about Asia, for example, many of these economies are running structurally short of not only oil and gas, but diesel, refined products, fertilizer, phosphates, etc. And that impacts their whole economic ecosystem. And again, as one of your previous guests mentioned, even if we were to get, a more protracted ceasefire over the next couple of weeks, it will take a number of months, in our opinion, to go back to a normal flow of these commodities. And so the question we have to be asking ourselves is, for smaller economies, can they survive economically if they are going through a 6-month period, for example, where their access to key inputs is severely reduced?
Yeah. Eric, one data point that I noted overnight, SWIFT put out data suggesting that the dollar's portion of international transactions has reached a record, more than 51% in March. That is, a record. And of course, we've been talking about the de-dollarization trend, very topical the last couple of days as well. We've been talking about the discussions that perhaps some GCC nations, even Asian countries, are having with the U.S. about the introduction of an FX swap line. Doesn't all of that just underscore the fact that the dollar will continue to be not only the world's dominant reserve currency, but also a currency that nations want to hold and need to hold?
I think that's a great way of framing it, Jumana. And your comments are consistent with our own research. The de-dollarization theme has gotten a lot of attention lately. I think the market has tended to overstate the magnitude of, some people call it a structural abandonment of the dollar. And I think that really is overstating it. We see global allocators reducing their dollar exposure, absolutely, but we think that's a cyclical story, not a structural one. And the SWIFT data is incredibly important. For all of the talk of the abandonment of the petrodollar system, the abandonment of the dollar as a reserve currency, over 50% of global trade is still settled in dollars, as SWIFT tells you. So I think that's a critical point to remember.
Yeah. Eric, always good to chat to you. Thank you so much for coming on. Eric Robertsen, Global Head of Research and Chief Strategist at Standard Chartered Bank. And a quick look at equity futures. Things are turning south this morning as we head into the European Open. The handover not so robust from Asia. And you can see S&P futures, NASDAQ all down about 0.6%. Take a look at European markets too, down 1.2%. But don't forget, it is going to be a very big day in terms of earnings and PMI for Europe as well. So we'll talk about that shortly. But coming up, emerging markets and currencies are under pressure as Brent crude stays above $100 a barrel. We'll discuss the outlook with Natixis next. This is Bloomberg. Good morning. This is Horizon's Middle East and Africa. Our top stories this morning. Strait standoff. The U.S. and Iran remained locked in a struggle for control of Hormuz, with Washington now saying the ceasefire will stay in place until Tehran submits a new peace proposal. Stocks and bonds falling as the stalled U.S.-Iran talks and the Strait's continued closure push oil prices higher. And Tesla under pressure, the company flagging billions of dollars in additional spending this year to support Elon Musk's ambitions of transforming the EV pioneer into an AI and robotics giant. It has just gone 8:30 a.m. across the Emirates. I'm Johanna Bersetchi in Dubai. Well, it was a record close yesterday for the S&P and NASDAQ. You wouldn't think so looking at the markets behind me today, given how much red there is on the screen. But once again, Wall Street scaling and making these new highs and really propelled by a lot of the underlying tech sector and the earnings that are coming through as well. So looking past the geopolitical concerns in this part of the world and really focusing on some of the earnings as well as the AI trade, which seems to be picking up steam once again in the last couple of weeks. But today, handover a little bit more muted. S&P futures down 0.6%. The handover from Asia down 0.9%. So some cautiousness there as we speak about the ongoing developments around the Strait of Hormuz. And nothing in the last 24 hours suggests that traffic there or the promise of return to normal traffic is reassuring. And if anything, what we have seen is sort of attacks and seizes of ships on both sides. And because of that, we are seeing an uplift once again on the price of Brent, trading at $103 now. So triple-digit figures, up 1.4%. And then 10-year yields, we have 2 basis points higher today. This is the 4th day in a row that we're seeing U.S. Treasury yields come under selling pressure. Now, switching over, I mentioned at the top that the S&P was at a record high. This is interesting because it tells you that it is the 16th day in a row that you've seen back-to-back gains for the semiconductor index. This is the Philadelphia Semiconductor Index. And you can see that sharp line there. It tells you it's a record back-to-back performance. A lot of love, a lot of money, a lot of inflows going into the semiconductor space in the U.S. And one chart I haven't shown here, but this is data that our colleague Dan Curtis provide. 45% of S&P revenue growth this year has come from the semiconductor space and equipment. So it just tells you a lot about where the performance is emanating from. And certainly, once again, it is back. Chips. Chips are very much in focus in the U.S. Okay, let's also check in on how markets in Asia are faring today. Min Lo is in Hong Kong for us. Min.
Hey, Jumana, you ended on that chips buzzer. I thought I would just follow on from there because chips also in focus in Asia because SK Hynix reported earnings this morning just before market open, and it was blowout sort of earnings, right? Five-fold increase in net income, a record when it comes to revenue, operational income, net income as well. And it's able to really hike prices, right, just because of its dominance in the industry there. But you take a look at the session here, some of these tech stocks on the board, it really has been quite a whipsaw that we saw this morning because if you look at SK Hynix, the intraday trading range was pretty wide. At one point, we were in the green, but now, of course, we're giving up all of that, now 1.5% lower. You look at some of its peers, though, as Samsung, for example, certainly is pulling ahead a little bit, especially when it comes to the advanced HBM4 chips. They were the first to ship those commercially, and it's still gaining about 1.2% today. TSMC seeing decent gains as well. Kioxia also has been fluctuating, even though we saw actually very, very strong gains earlier in the morning just because of its dominance in the NAND memory chip space, which is seeing so much shortage in supply. You flip the board, you take a look at MXAP, right, the regional benchmark, and you can really see, this morning, right out of the gate, a big bump here as we digest the earnings from the US, from Boeing, from Texas Instruments, from Tesla, and then you have the South Korea GDP also above expectation, topping all analyst estimates. And then throughout the day, that sentiment started to sour, perhaps because of the headlines out of the Gulf region and this continued uncertainty as to how the end game is going to look like with this ceasefire looking like it doesn't have a deadline at the moment.
Min, thank you so much. Min Lo in Hong Kong. Emerging market stocks and currencies are wavering as the Iran war drags on. With Brent back above $100, investors are reassessing risk as higher energy costs ripple through markets. But the impact in Asia isn't uniform, with the energy shock driving a widening gap between economies depending on their exposure. Joining us now is Trinh Nguyen, senior economist for emerging Asia at Natixis. Trinh, always good to chat to you. So you just, on X, you posted a chart that caught my attention about half an hour ago, highlighting how equity indices around the world have done since the ceasefire came into effect a couple of weeks ago. And most notably, right at the top, you've got the Kospi index, but you have a bunch of other Asian indices too, China, even Turkey, some of the other emerging market names that I noticed as well as having done really well. How much of this can be pointed back to just the resurgence of the AI trade, as I was just describing a couple of minutes ago, versus the unwinding of geopolitical premium?
The Iran war has certainly hit Asia the hardest, and for every country, it's a negative shock. That said, the K-shaped performance is really about whether or not you have buffers, and the buffers come from chips. Whether or not you have a lot of chips, which we're at the super cycle at the moment, where memory chip prices are very high. So if you're like Korea, where you have 51.4% of your equity index in ICT, then you're doing really well as Taiwan. However, at the end of the spectrum, you have the Philippines, which has very limited chips. At the same time, it faces supply shortages that require it to do demand destruction. And I think that is where we are today. Do we have offsetting factors in the face of this very negative shock? And therefore, before the war, we had a very big divergence within Asia. And after the war, we will continue to have a big divergence because the ceasefire itself is saying that countries that continue to be more exposed to the supply shock will continue to be affected, whereas economies that have earnings that are skyrocketing thanks to the chips factor, thanks to the ability to secure helium, will do better. And I think that's where we will, divergence will continue.
Okay, I get your point on that, other sources of revenue. But at the same time, the longer the Strait remains effectively shut, the more upward pressure you're going to see on oil, the more difficult it's going to be for these Asian economies to source their energy. And at the same time, we talk about the stockpiles being run down. So is this just not a race against the clock for many of these Asian economies?
Absolutely. I think the duration of the shock matters. If it were a short-term shock, then you would have countries that can endure it doing better. And at the same time, given the exposure to shocks and the ability to buffer it, they will do much better. And this is why the longer the duration of the shock will last, I think the divergence itself will continue to widen. Why is that the case? If you look at the Philippines, the way it copes with it is really demand destruction. In Pakistan, there's rolling blackouts. Meanwhile, in Korea, you're throwing 17 billion supplementary budget at the problem, which subsidizes prices. So there we will see a wider fiscal deficits for countries that have challenges. That is one of the reasons why the equity market is really disconnected from the rates market. The rates market sees through the fact that even if we were to have subdued inflationary pressures, thanks to the subsidies, we would still see that via higher deficits and worsening fiscal positions. And therefore, rates have sold off even if equities markets have recovered. And this is where you can see the impact on the economy on the Asian economies much more in the rates market versus the equities, because equities actually do not reflect the economy. They reflect the global chips super cycle.
Yeah, that's fair. That's a fair point. I think you could say that about all equities at this point. Trinh, let me ask you about the big one. Where would you rank China in terms of countries most impacted to least impacted by the ongoing Iran war? And of course, loads of reporting about, number one, the immense amount of stockpiles that China are sitting on, but at the same time, the fact that they are still somehow managing to get their hands on Iranian oil.
Well, if you want to argue the idea that China exceptionalism is happening, it is happening in the rates market. Given the fact that there's a lot of liquidity, weak demand, rates in China actually rallied. Everyone else has sold out except China. The renminbi actually has appreciated versus the dollar, versus the other FX. But look closer, and then you'll see that in equities, China, listed in Hong Kong, is actually negative, and that's one of the worst markets in the world right now. And so therefore, you have to really have to look closer on which asset you want to be positioned for China. China itself is facing margin compression. Even before the war, profit margins were very low, if not negative, and higher costs are squeezing profit margins. You can see that in the PPI. Now, the next question is, can you pass it on to CPI? Will they be able to pass it on to Chinese consumers who are very, very cautious with their spending? And I think this is why China exports will continue to be its engine. So you can bet on Chinese exports, but if you were very exposed to domestic demand in China, especially in discretionary spending, I think that's going to be very difficult. And that's why divergence is seen in equities market and the rates market in China. Whereas if you look at Korea, for example, exceptionalism is happening in the equities market. It is Taiwan and Korea are the best, not just in Asia, but the world globally. And if you look at the exports number, it's staggering. But that's really just about chips. And look deeper than other sectors that are very sensitive to energy is actually they're weakening. So I think the K-shaped economy is really within the region and within the economy itself. And as investors, we'll have to be discriminating.
Trinh, your wealth of knowledge, truly very impressive. Thank you so much for coming on the show. Trinh Nguyen, Senior Economist, Emerging Asia at Natixis. Well, the IMF's Middle East and Central Asia director says a prolonged war and continued closure of the Strait of Hormuz could deepen economic disruptions well beyond oil and gas. Jihad Azour told me that how the shock is reverberating across the Gulf and broader global trade.
Of course, this war delivered a severe shock to the region. It was sudden, disruptive, and the reverberation of this shock are expanding beyond the remit of the region. Of course, there are the countries who are at the epicenter, countries in the Gulf where oil and gas were hit. We're now more than 50 days after the disruption and the closure of the war of Hormuz. This had an impact on countries who depend on that. Of course, countries are not in similar positions. There are countries who are highly dependent, like Iraq, Kuwait, and Iran, the most affected. There are other countries who can have access outside, like Saudi or Oman, are less affected. But this shock is not only in oil and gas, it also affects industrial products, trade, tourism, international logistics. and affects countries beyond those who are directly hit by the conflict. For the oil importing countries, the impact is mainly by the increase of price of oil, remittances, and also impact from the financial markets.
For the MENA region as a whole, you've slashed your growth forecast from 3.5% in 2025 to 1% this year. Now, I've got to ask you, what is the sensitivity of this forecast to the time length of the war and the fact that even today, yes, there is a ceasefire in place, but the Strait is still effectively closed? Could we be in a situation where these forecasts get revised downward even further? Could we even be in a situation where you could forecast a recession for the region as a whole?
Well, those projections are based on a reference scenario that implies that the war will end by mid-year and the recovery will be fast. What will change our projections is the duration of the conflict, and to the extent this will keep the Strait of Hormuz closed, the depth of the disruption, and how fast the recovery will be. What this economic shock showed us that it's not only about oil and gas, it's about several other activities and products. The scarring effect of this war will also determine how fast countries can recover. Therefore, we are in a highly uncertain moment at this stage. And I think it's very important to take this high level of uncertainty into consideration when one would look at the projections for this year and next.
That was the IMF Middle East and Central Asia Department Director Jihad Azour. Now, the Iran war is hitting global food supply chains, with large amounts of food aid delayed as shipping through the Strait of Hormuz is disrupted. According to the United Nations, emergency food deliveries are stuck at ports as shippers contend with backlogs caused by the closure of the Strait. Bloomberg's Jennifer Zabazaja spoke with UN Deputy Secretary General Amina J. Mohammed, who warned that the crisis is putting more pressure on vulnerable countries.
We are dealing with supply issues, and so therefore fertilizer, the planting season, food security is high up there, but so too is fuel and energy. So yet again, as we had with Ukraine, the energy crisis, the food crisis, the cost of living, and that kind of fiscal space needs to be created for countries that are going to be dealing with the debt crisis. They are still repaying their debts. Inflation will result in interest rates that will put many countries in jeopardy on the debt issue. So we're looking to find solutions here from the IMF, from the World Bank. There have been many offers of the windows and facilities that could be put at the disposal of countries. But I think at this stage we need scale. Many countries are still recovering from the previous shocks, and some of those crises are not over yet.
That was a snippet of the stories we'll be covering in our monthly show, Next to Africa, that airs tonight. You can catch the full episode on your terminal, our website, and on TV. Now, Lebanon and Israel are set to hold another round of US-mediated talks in Washington today. The current truce is set to expire within days, even as Israeli and Hezbollah strikes have continued on the ground. Bloomberg's Dan Williams joins us now from Jerusalem. Well, Dan, of note yesterday, President Aoun, the Lebanese president, said that he was going to push for an extension of this, what I would describe as a fragile ceasefire, especially given the developments the last couple of days and the killing of that Lebanese journalist, a very prominent journalist, which raises a lot of questions about the sustainability of this ceasefire. But how realistic really is that it gets pushed back?
Germana, there's kind of a grim minuet here between the Lebanon situation and the situation in Iran. Lebanon, as you'll recall, is the second front, or has been the second front of that Iran war, a war that is now in a state of open-ended ceasefire. I think the Lebanese would like at least to have the Lebanese ceasefire track with that in terms of pushing off its imminent end. The end of the Lebanon ceasefire is only 3 days away to, if we keep with the original agreement. Then again, there's always the chance that there could be a surprise resumption of the war in Iran. The Lebanese will want to tilt quickly and separate Lebanon from there to preserve some semblance of calm in their country, perhaps appealing to Israeli interests in terms of Israel wanting to have one front if there is a resumption of the attacks on Iran. Now, the Lebanese have understandable concerns. There is the continued Israeli presence in the south. There is the mass displacement of Lebanese from the south. But Israel will push back and say that as long as Hezbollah isn't dealt with, isn't disarmed one way or another, they see no reason to change their military disposition. And as you noted, the situation is very fragile. However, if you consult Clause 3 of the ceasefire deal as published by the US State Department, it does provide a lot of latitude to the Israelis for striking against perceived Hezbollah threats, whether imminent or planned. Also, Hezbollah itself is not part of the ceasefire, so it could claim arguably for its own rights to continue shooting at Israeli occupiers. It is fragile, but I think as long as both Israelis and Lebanese, the Lebanese authorities talking to the Israelis, want to preserve it, there's some reason to believe that the ceasefire as it stands will be preserved.
Okay, so is the best hope then out of today's discussions, which, by the way, I also know that Mike Huckabee is set to be attending as well, that's the U.S. ambassador to Israel. Is the best outcome, therefore, a framework for further negotiations, given, number one, the question about the ceasefire, and then two, the bigger issues, which obviously surround the eventual disarmament of Hezbollah?
I think so. These are staggered processes, especially when it comes to countries that until very recently didn't talk to each other. Only a few years ago, it was a crime in Lebanon, or an actionable crime, to even talk about normalization with Israel. So that in itself, psychologically, is a crossing of the Rubicon for many Lebanese. I think what the Israelis and the Americans will hope for is that that would embolden Lebanese authorities to carry out their long-deferred crackdown internally on Hezbollah. And I imagine they will try to find a formula whereby they can help Lebanese authorities in doing that, short of a full resumption of Israeli strikes. Ambassador Huckabee, as you noted, is close to President Trump. He's also very close to his Israeli hosts. He's considered something of an Israel whisperer. He has been involved in the past in direct secret war planning. So he is someone who's very intimately aware of the situation in the Middle East. Should there be some kind of resolution at that ambassadorial level meeting today in Washington, presumably he would be one of the advocates to take it back directly to Prime Minister Netanyahu and argue in its favor.
Bloomberg's Dan Williams in Jerusalem. Thank you so much. Well, coming up, we'll break down Tesla's earnings, what's driving its massive investment push, and why markets are wavering. This is Bloomberg. Welcome back to Horizons Middle East and Africa. I'm Joanna Bersacci in Dubai. Tesla shares swung to losses in extended trading after the company revealed plans to ramp up capital expenditure this year to $25 billion. That came even as quarterly earnings beat expectations, with demand for its EVs rebounding worldwide.
I think you've seen most, if not all, certainly the major technology companies substantially increasing their capital investments, and we're going to be doing the same. I think it's going to pay off in a very big way.
Bloomberg transport reporter Danny Lee joins us for more. Danny, okay, so the earnings were good, but the market seems to be a bit spooked out by that huge capex investment figure. Give us the context here of how large are we talking?
Yeah, Elon Musk is joining this spending parade here of big capital investments. This $25 billion, though, it's 3 times more than Tesla had spent in the past year on capex, and actually it's more than the 3 years combined in terms of capex almost. So it gives you kind of a size and scope of just how much Tesla is putting into this aspiration of robotics and AI that it really wants to reach, and something that Elon Musk has been very clear he wants to hit that kind of goal of transforming from just an EV company to something much more driven by AI overall. And the kind of heavier spending that Tesla has earmarked, it kind of gives a sense of Tesla wanting to go faster and much quicker, but also much more intensively how much that cost will be to the company. So that's maybe where some of the negative reaction in the share price is feeding in overall. But yeah, it just helps that the company's on a better footing with 2 more improved quarters of sales and sales overall of its EVs, of Tesla's EVs, now improving around the world.
I remember many years ago, I was speaking to a very notable industry figure, and he said to me that Tesla was a tech company that sold cars as opposed to a car company that did tech. And I think, the latest bit of news as well, the fact that Tesla are now looking to spend, $3 billion on a research chip factory in Texas proves that point. What do we know about that investment?
Yeah, it's important that it's just a research chip factory for now. So that $3 billion earmarked is a drop in the ocean of what some of the mainstream players like TSMC would ordinarily spend, frankly. So it's a tenth of what would ordinarily be spent on something more full scale overall. So this kind of money will go towards outputting a number of chip wafers a month. And so this is just a fraction of enabling Tesla, hopefully, to realize its dreams of having an advanced chip manufacturing line one day. But it needs know-how, it needs a skill, and it's going to be partnering with Intel on that. And so that will help. But yeah, it's just the early stages that it will leverage not just Tesla, but its SpaceX division in order to try and help it reach its goal of being a major player one day in that kind of chip space.
Bloomberg's Asia, aviation and transport reporter Danny Lee, thank you so much for the update. Well, Tesla, one of the stocks that we were looking at yesterday, and of course a whole bunch of other earnings dropped, Boeing too, posting solid results. And what we saw was a record high by the end of the day, a record close for the S&P and NASDAQ. Today, things have turned south, probably because of all of the events that have taken place at the Strait and around the Strait of Hormuz over the last day or so. European markets down 1%, and we're also keeping a close eye on oil. As ever, Brent is above $100 now, so back to triple-digit territory for the key energy indicator. And that is it for Horizons Middle East and Africa. I'm Joanna Versace in Dubai. Stay with me for Daybreak Europe. This is Bloomberg.